Bitcoin is a revolutionary digital currency. It operates without central banks or any single point of control. One of its most important features is the halving. This event is pre-programmed into Bitcoin's code. It happens approximately every 4 years. The halving generates significant discussion and excites people all around the world. It is a core part of Bitcoin's design, based on mathematical certainty. Understanding the halving is vital for anyone interested in finance, technology, or the future of money. The halving introduces programmed scarcity. Governments can print more money, leading to inflation. Bitcoin's halving does the opposite, reducing the creation of new Bitcoins. This ensures a controlled, limited supply. We will explore what the halving is, how it works, and why it is important. Let us begin this journey of discovery. To understand the halving, we first see mining. Bitcoin mining is a complex process. Miners use powerful computers to validate and confirm transactions, forming blocks on the blockchain. For this work, miners receive a reward of new Bitcoins. This is how new Bitcoins are created and enter circulation. The Bitcoin halving directly affects this reward. The term halving means it is cut in half. The reward miners get for adding a block is reduced by 50%. This event is scheduled to occur every 210,000 blocks, roughly every 4 years. This predictability is one of Bitcoin's strengths. Satoshi Nakamoto, Bitcoin's creator, designed it to control Bitcoin's supply. It mimics the mining of precious metals like gold, which becomes harder to find over time. Bitcoin's halving creates a similar effect, ensuring a decreasing rate of new supply. Bitcoin has a strictly limited total supply of 21 million Bitcoins. The halving process ensures this finite supply. Each halving brings us closer to the limit. This programmed scarcity is a core feature. It makes Bitcoin different from other assets and underpins its long-term store of value. Economics often comes down to simple principles. Supply and demand are powerful forces. The Bitcoin halving directly impacts supply, reducing the new supply. The rate at which new Bitcoins are made slows, meaning fewer new coins enter the market. If demand for Bitcoin remains steady or increases while new supply decreases, basic economics suggests a price effect. This usually means upward pressure on price. Less of something new is available, making it more valuable. This mechanism makes Bitcoin deflationary by nature. Central banks can increase money supply, leading to inflation. Bitcoin aims to be different, preserving purchasing power. The halving is part of Bitcoin's long-term vision. Each halving event makes Bitcoin scarcer. This contributes to its narrative as digital gold, a store of value for the digital age. This programmed scarcity is a deliberate and core design choice. It is fundamental to Bitcoin's potential and its role in the financial system. Section 4. Lessons from history, past halvings, and their market echoes. Bitcoin has experienced several halvings already. The first was in November 2012, reducing the block reward from 50 BTC to 25 BTC. The second halving occurred in July 2016, reducing the reward to 12.5 BTC. The third halving was in May 2020, reducing the reward to 6.25 BTC. The most recent halving was in April 2024, with the reward now at 3.125 BTC per block. Historically, significant price increases often followed these events. This did not happen immediately, but rather in the months that followed. For example, after the 2012 halving, Bitcoin's price rose dramatically in 2013. Similar trends were observed after 2016 and 2020. These bull runs attracted much attention and brought many new people to Bitcoin. Halving events create a lot of anticipation and media coverage. More people become aware of Bitcoin and its unique properties. However, it is crucial to be cautious as past performance does not guarantee future results. The halving is a significant factor, but it is just one piece of a complex puzzle. Section 5. Looking ahead. Navigating halvings and understanding Bitcoin's design. As of today, May 26, 2025, we are past the 2024 halving. The block reward has been reduced to 3.125 new Bitcoins per block. The effects of this recent halving are unfolding. The next halving is expected around 2028. Each event continues the programmed scarcity. This is a fundamental aspect of Bitcoin. It will continue for many decades until all 21 million Bitcoins are mined. Staying informed about these dynamics is key. The world of cryptocurrency evolves rapidly. Understanding core events like the halving helps navigate this space better. The halving speaks to the core design of Bitcoin, its commitment to unchangeable rules. rules enforced by mathematics and code, not by people or institutions. This predictability builds trust in the Bitcoin network. Continue to learn about Bitcoin, its technology, and its potential.